What is a hard money lender in real estate? Well, it's who I am and it's who you could become. It's a very different way to be still an investor in real estate. So I want to talk about three things specifically around becoming a hard money lender. How do you actually leverage other people's money? What is that going to look like? And then how do you become one if you want to become a hard money lender? Number two, the advantages and disadvantages of using OPM. Everyone makes it sound like it's the end all be all and the way to get it. There's a lot of disadvantages to it. You've got to know those going into this. And then again, just the common misperceptions about good debt, bad debt, how debt's used. I mean, debt's just the cost of money. So it's either being paid to you as a hard money lender, like I won't do any less than 10%. And I do those for my very, very, very close people that I know. If I don't know you very well, you're going to be paying me 15, 16, 17% interest on my money to be a hard money lender. And I'm going to take a first position. So other people's money, there's many books written about it. Actually, probably not as much smart ones than there should be. They make it all sound like it's easy and sexy and simple, and it's not. It comes with some risks that we're going to talk about in a little bit. But OPM is really other people's money that you're going to go seek, find, use somehow, friends and family, 401k money, maybe it's just their savings, and you're going to pay them an interest on a promissory note. You're going to take the money and you're going to go buy some real estate with it. Now, if you need credit, they might have money and credit, which means then you have a very different deal because they're bringing more to the, through the entire transaction than you are. So if you need help with them, please call our team, get in our coaching and mentoring program. We'll teach you how to be a hard money lender or how to go find OPM. I teach that all the time to my students. And so have a strategy session, talk to our team, tell them you want to become a real estate millionaire. I use other people's money. It's how I got it done. My first millionaire game was 100% OPM and OPC of other people. And then I'll get to the disadvantages coming soon. Traditional OPM is going to cost you anywhere between 8, again, 16, 17%. So it's more expensive than banks. You don't have to provide all the documentation that a bank's going to require, but I am still a fan of the traditional bank loan that gets you down in the 2, 3, 4, 5s. Now, because of interest rates the way they are, commercial lending is a little bit higher. And it's depending on what you got and your history and financial, strategy and what you've done in the past, could be as high as 8%. But, you got to weigh. Going to a bank is going to be a very different experience than going to a hard money lender or OPM and OPC to get that money in hand. You're going to need a company, LLC typically, and you're going to need a darn good operating agreement. So again, we help coach you through that. I have 9 points I put in operating agreements that most people never put in their operating agreements. They're really, really important that you actually do these, but you got to come a little closer. So have that strategy session and we can talk about it. The other part of OPM that's going to be required, and the bank is going to want it, but not demand it as much as somebody that is a smart investor, hard money lender, you're going to have to be providing financials, whether that's monthly, quarterly, 2 times a year. Some of them are going to want to audit financials, so you have to be much more organized and together in your structure before someone's just going to hand you money, or they shouldn't. So some of you who don't even know how to put a business plan together, you need to get started. So I have a great program. It's called Building, Leading, Protecting Your Business. I'm just going to give you a link. I can't give it to you for free, but go out and grab it. It's a 4-hour business plan. It's enough operational knowledge that with that plan, you will be able to attract OPM and OPC. And it's enough that you can get started taking some initial documents into the bank to actually ask for it. Now, what are the advantages and disadvantages? So again, the advantages, it's very different. It's personal. They're going to want a first position. There's very rare moments that I see a hard money lender taking a second position. Some will, but they're going to want to collateralize some other asset, maybe your home. You really don't want to do that. So be careful what you have to collateralize to them. The bank's just going to come get the property back from you. Right? So that's typically what's going to happen. And you say, well, can't a hard money lender coming back and get the property from you? Yeah, if they had good paperwork and good note and good collateral and they actually were in the right position, yeah, they can actually come back and get it from you as well. Being in a debt position is the senior most position in the financial space. You can own equity. Shark Tank makes equity look so sexy, like everybody wants to be an equity owner in little bits of companies. Equity, if that company goes down, you go down, you lose it all. If you are in debt and in position and it's actually, been certified debt, you're in first position with the courts, you're in first position with the banks, you're in first position for all of it. So again, traditional financing is a lot cheaper. different kind of money than going hard money. So just go check it out. Just my advice to you right now, and typically I don't give advice, would be go interview some. Go interview 2, 3, 4 hard money lenders. Now, they're not going to entertain you very long if you don't come with a project. So you probably should go out and look for a project, whether it's land or a storage unit or RV park or whatever you're looking for. And you want to bring a project to them of why you want the hard money and what you're going to do with it. There's another section of the plan that's called use of funds. How are you going to use the money? If I gave you 100 grand, what are you going to do with it? Are you going to go buy yourself a new vehicle? Can buy yourself a big screen TV? Are you actually going to fix the property? Is it the down payment of the property? What is it? What's the use of the funds? You got to know that in detail, or I would not start these interviews. Again, if you got to get mentored and coached, I did. The only reason I know all of this stuff is I've been mentored and coached since I was 17 years old. That was just a few minutes ago. And I've been doing this a long time. So the last thing is probably just weigh the cost benefit. Like, what's the cost of more traditional funding versus you using OPM and OPC? And don't forget 401k money. There's a lot of that around, and you could take that in the form of hard money as well. Now, before I go to the last point, I want you to subscribe to my channel. I want you here every day. Click that notification button and share this with a bunch of people you might want to be doing some projects with. Maybe people who might be OPM. They need to be here learning and listening, so that engages you in a conversation with them at a way different level of knowledge than just somebody out roaming around on the internet. The bathroom wall's got a lot of bad information out there. So be careful what you're reading and be careful who you're listening to. Now, the last point, what are the misconceptions about good debt and bad debt? I'm a huge fan of good debt, especially on your growth to becoming a millionaire. Using good debt is using other people's money. It's using bank money, but it's leveraging against assets that are here to build generational wealth for you and your family, or even just put you through a 2 to 5 year investment strategy using some great real estate. Bad debt's all lifestyle stuff. It's overspending on lifestyle stuff that gives you no return. Might have a little moment of fulfillment, but later in life, you're not going to have any money. So most people think of all debt as bad debt. It is not. There is a whole section of good debt that has created more multimillionaires and billionaires than you could even imagine. You all think we use our own money. We don't. Why? We don't have to. What do we bring to a party? What does a shark bring to a party? Or a transaction, really, not a party, but like, what do they bring to an experience? They bring their brains, they bring their knowledge, they bring their Rolodex. So what you really want with a mentor and a coach is somebody who's going to bring all that. They're going to introduce you, they're going to help you shortcut any mistakes, and they're going to show you a path to growth faster than you ever know how to do it. So if you want to talk to one of our team, go to askloral.com. Make a request, ask a question, and we'll put our strategy session links in there as well, so you can grab a strategy session with one of our teammates, have a one-on-one, and say, how can I work with Loral and her expert team to become a real estate millionaire? Go to Ask Loral again at any point, and we'll be back here tomorrow.